Yo, yo.
Can you hear the music in the background?
I got music in the background, yeah.
No, I'm saying, can you hear it? Can you hear it through my computer?
Hold on. No?
No.
No, I can't hear it. Hey, we got a buy on your NZT right now, bro.
Send setup. Send setup.
Yo.
You want me to send in the 2.0 or just throw it in the...
Throw it at least in the free chat.
Or fucking make it a premium.
All right. That shit already taken over.
Yeah, I think it is. But
I'm gonna give Berto a high five.
this bitch might be just testing us.
Yo, can y'all hear me?
Yes, sir.
All right.
BD, sir.
Damn. Nigga look like he about to play fucking Call of Duty. Oh,
Beta drop tomorrow. You feel?
I haven't even pre-ordered, bro. Fuck, I need pre-order.
You're slacking. Drops at noon central.
So that's what?
2 p.m.
3 p.m. for us? 2 p.m. for us? Yeah. Fuck it. Who's on?
We got that one in Ghost and Candy. I think from the 786. Look. That bitch gonna touch.
What? Wait, are y'all talking about your NZD?
Yeah, bro. We got to buy for that shit. But that shit's shooting up, man. That shit. We're gonna wait for a quick re-entry and shit. But yeah, it's still overall a buy, bro.
Yo, Berto, NU just wicked on the 1 hour, but it didn't break that trend on the 1 hour for that fucking falling. I guess I call it a falling channel, but it's like a, it was going down, higher highs.
Yeah, bro. She rejected. You remember that I told you she was at the 786 and 618 levels? She rejected the fuck out the 618. Like she kissed the 618 and just shitted.
Yeah, so I think we're good.
I
think if we get to at least, I have a short term TP at 64090, bro. If it gets there, then I'll be happy. I'll get out. But I have two positions, so I'll let one run. But that short term TP is what's gonna dictate the rest of the trade.
UJ running.
I'm happy with UJ, bro. We should have taken that buy when Kelvin said buy. We would have been up.
I only got in like 10 pips after him, so.
Oh, for real?
Yeah.
So you got in at the same time I did, I think. Sheesh. Fresh haircut, Otis. Otis a brand new guy, bro.
So Wiki.
Kelvin said on the way.
¿Y quién es Rafael?
Huh?
Who's Rafael?
Who's who?
Rafael.
Rafael. I don't know, bro. I don't know who that is. How do you put a picture of you when you're gone?
It's connected to my Facebook, so whenever I turn my camera off, it just puts my Facebook profile picture. But let's go ahead and get started, bro. If anybody hops on late, then they'll just catch some late nuggets, and I'm gonna upload this as soon as we're done, so that way we're not wasting the time.
Okay. You want to go ahead and start it, or you want me to go ahead and start?
I'll let you lead off.
Okay. All right. See how many people we got. All right, guys. So for the short amount of people that have came to the call, we're gonna go ahead and get started. It is 9:05, as we said that we were gonna get started. Just want to appreciate you guys for getting on this call with us. I know there's probably a lot better things you could be doing at 9 at night on a Wednesday. But what we're gonna be going over today is trading psychology. So I know that a lot of you guys are familiar, or at least you guys have hopped on to at least one or two of the mindset calls that we've had going on. This is kind of going to be something like that, but this is going to be more so highlighting trading plans, overcoming greed, and understanding fear. Those are going to be the three things that I'm going to go over today. So without further ado, the first thing that I really want to talk to you guys about is setting rules and having a game plan when you're trading. So a lot of us, I know, especially myself, a year ago when I started trading, and the first thing I thought to myself was, I just want to make a lot of money. Like, a lot of standards were getting thrown around, a lot of profits were getting showed to me. So the first thing I thought to myself is, I just want to start trading. I want to start making money, throwing crazy lots, doing all that kind of stuff without really having a strategy or without really having a game plan set that I wanted to follow myself. So one thing that I encourage you guys to do is to set a trading plan. Write it down, put it in your iPhone notes, whatever it is that you need to do, whatever it is that's going to help you remember it and live by it, because that's something that you're going to have to live by day, then do so. So a trading plan for me is what session works best for me. So I don't really trade the Asian session because that's when I get off work. I'm a little tired. I just go to the gym, I go for a run, I have shit to do. So I trade the end of London and beginning of New York session. That's my preferred session. So I have that set in stone. That's something that I like to do. Another thing is rules. Set yourself rules. Rules if you lose and rules if you win. So let's say you're on fire for the week and your goal was to, I know Kelvin's goal is 5 out of 10 or 50% effectiveness throughout the week of trading. That's something that I adopted myself. So if you already are over the 5 out of 10, are you going to keep going? Are you going to keep leveraging or over leveraging? Are you going to keep trading, or are you just going to say, hey, enough is enough and this is where I stop? Because I know that we're sending signals day in, day out at all times, but you really have to get to a point where you have to have that discipline and say, you know what, my rule was I got here, this is where I'm going to stop. Same thing when you lose. You need to have a plan that you're going to execute if throughout the week it's not going so well, because I promise you there's going to be weeks, I've even gone months where it's just, I'm not hot. It's not going good. Things get out of hand, and the worst thing that you can do is revenge trade. If you lose a trade, if you go in for the buy and you lose on the buy, go directly in for the sell. That's the worst possible thing you can do, because that's just, you're acting based off of emotion. And if you let your emotions get to you when it comes down to trading, I have really bad news for you. It's not going to go well. Another thing is, with your trading plan, with your game plan is, are you going to have a monetary or versus a pip count, and how you're going to keep count of all the trades that you're taking or how many pips you're getting. I know Berto's huge on how many pips he does per week. I don't know if you're still doing that, Berto. I don't know if he's there or not. He's probably not. So Berto is one of the type of people that he takes into account how many pips he does per week.
My bad. I was setting up my board, so I know like my talking points when I get on. Yeah, I kind of stopped. You know, I went through the whole blowing my account and not trading for a little bit, and then September I haven't kept track of it as much as I was, but October now I got my license. I'm gonna be funding on a weekly, not on a monthly basis anymore. That kind of thing. I'm gonna go back to. Yeah, I like to do so pips gained, pips lost, my net pip profit, and then potential pips. Because sometimes I'll move my stop loss into a profit that maybe it was too early to move it, and then the trade goes up 200-300 pips and it hits my take profit. So I like to put the potential pips, because that just helps me confident wise, kind of seeing like, hey, I won this trade, even though my psychology, or maybe I didn't follow my trading rules, as David is talking about, was off a little bit, I won this trade. Overall, my analysis was correct. So it helps me when I come, per se, next up time to bat and look at a chart again.
Right. And it like increases your confidence because it's like, let's say you had a stop profit and it hit your stop profit, but the trade went up and hit the 160 pips that you anticipated it was going to hit. That still helps your psychology when it comes down to trading because it's just like, okay, this is what I need to work on because if I would have had this down a little better, I would have gotten to the 160 pips, 200 pips, whatever it is that you had coming into it. So Berto's big on that. If you guys have questions about that, because even I had questions about it, I'm still trying to get the pip count. I'm not the best at taking care of myself when it comes down to that. I look at the monetary side, which isn't that great sometimes, but if that's something that you guys want to do as well, you guys can definitely ask me or any of the other traders that have been doing this for a while. So that's the rules and game plan part of it. Setting a game plan, writing it down, what sessions you like, how many pips you want to gain, rules if you lose, and rules if you win. Essentially, those are the big things for me when it comes down to my trading plan. So moving on to number 2. Oh shit, my bad, guys. I have like this whole thing jacked up in the most ghettoest way, but you know, gotta fake it till you make it. But rules. Number 2 is overcoming fear. And I'm gonna highlight Otis on this one because Otis is always saying a stop loss means stop looking. So if you go into a trade and you set a stop loss, and if you're one of the people that is just constantly checking your phone, because I can tell you that based off of experience, when I first started trading, even the first 6 months of me trading, I kept looking every 5 minutes at the trade to see where it was going, to see if I should move my stop loss, all that type of stuff. And all that type of stuff at the end of the day will fuck with your head. So if you set a stop loss, that means you're confident in your stop loss, you're confident in your trade, and you don't need to be looking at it as much as you would when you were a beginner trader, amateur trader. Nowadays, I like to trade based off the 4 hours. So I look at it at every 4-hour close because 4-hour candles are very volatile. So I go based off of that and I move my stop loss accordingly. But number 2 is you got to trust your analysis. Whether a signal is sent, whether I send a signal, Berto sends a signal, whoever sends a signal, look at your own analysis of the trade. Don't always take a trade blindly just because someone sent it in the Elite Premium Signals chat. If it's a free signal, it doesn't matter who sent it. It doesn't matter if the person that sent it is making thousands of dollars. Get your own opinion on it. If you like the trade, you can basically break down the trade. I know we sometimes send 3 TPs. Break down the trade to lower TPs if you like, or just look at it with your own analysis. And if you ever go into a trade doubtful, you already lost the trade. So if you ever go into a trade doubtful, you already lost it. And also another big thing is that what you got to take into account, and I think Berto has this on my FX book where you can look up the risk reward, how much money you're risking and stuff like that. I honestly don't use it as much as I would like to, but I really need to start.
I'm gonna actually highlight that when I talk in a little bit. So
that's big. So also another thing that you got to take into account is that the money that you're risking is lost already. Act like that money is gone. Safe away. Like it's not part of you anymore. You're risking it because you want to make more, obviously, but that money's gone. So don't mind it when your stop loss hits because you were like, hey, you know what? The money that I put down, this is an investment. At the end of the day, this whole thing is an investment. Aside from being an investment into yourself, into your family, whatever you want to look at it, but each and every single trade is an investment. So that money, you have to know that you're letting it go and you can't keep it on the leash. So that's number 2. Lastly, number 3 is something that I'm really, really, really big about. It took me a lot of time to do this, and it's overcoming greed. I know that personally myself, when I really started getting the ball rolling, when it came down to winning trades, if I had 2 or 3 winning trades in a row, I would think to myself, hey, I just dropped 2.05s. Why don't I just drop a 0.15? Or why don't I just start over leveraging? You really got to get disciplined when it comes down to it. You can't get greedy because if you get greedy, it's going to come back and bite you in the ass. And that's another thing that I was going to say as well. I'm pretty sure most of you guys have heard me at the meetings, and if you haven't been with me at one of the meetings yet, not to toot my own horn, I recently was able to pay my car off. That was supposed to take 3 to 4 years. I paid it off within a year, just off of Forex earnings. The whole thing was just Forex earnings. But at the end of the day, on a daily basis, I would tell myself, today, all I want is $20 out of this trade, or all I want is $20 out of the day. So if you put it, I put it into perspective myself. I told myself, if I were to wake up every day and I would look to my left where my bedstand is, where my phone is charging, and a $20 bill would appear, would it make my life better? Would it make the day easier? Would it make me happy? Yeah, because $20 a day with another $12 would fill my gas tank. It would probably fill, my lunch for the day. And if you look at it, $20 a day, $100 a week, $400 a month, and it just keeps on going. So the little money starts to really, really add up. So that's one thing that if you guys want to go ahead and use that, then start implementing the $20 a day. Cool. Right now, I'm not trading my main account. I'm actually trading a smaller account. But once I get back into my main account, it's going to go from 20 a day to 60 a day, because I saw that I could break 20 a day consistently. And now I'm going for 60. I could break 20 a day consistently. Now I'm going to try to go for 60. But start low. Even if you're up $800 on a trade, even if you're up 100, it doesn't matter what you're up. Take that money. You won the day. You did what you needed to do, and you'll feel much happier, regardless if you made more that day or regardless if you didn't make anything at all. But at least you secured the day. Another big thing is US 30. I know lately we've been sending out a lot of US 30 signals. My advice for people that have less, I know some of the educators and some of the people in the chat are saying $200 in your account. You can trade US 30. With Hugo's way, you can. With LMFX, I can't even trade it right now. So I'm happy that I can't. But my advice is, if you don't have at least $400 to $500 in your account, do not trade US 30. It kills your margins. It is a very, very, very rewarding pair. But at the same time, it could take a lot of money from you. So I know you guys see a lot of profits being thrown around, a lot of US 30 trades. Trust me, your time will come for you to start trading US 30. So just keep in mind that if you want to go ahead and do it, then go ahead, but just know that you've been warned. Last thing when it comes to number 3 is for you guys to remember that this is long-term. This is a long-term game. For me, the end game is having the ability to wake up every morning and not have to punch in, not have to clock in, not have to be told when I need to go ahead and take a lunch, get on my laptop, put in the trades that I need to do, and just be chilling for the rest of the day and make my guap for the day. But for me to get to that long-term success, I need to grind it out with these small lots and all that kind of stuff. So if you think that this is going to be something that you're going to make short-term money, then you already are on the wrong mindset. So short-term mentality yields short-term profits and short-term results. So just think about this as a long-term investment into yourself, whether it be generational wealth for your family, because that's something I want for myself, something that you're going to be able to pass down to your kids. They're going to pass them down to your grandkids, and so on and so on. And then to end off my part, I really want to elaborate on our premium members. I want to thank you guys for being premium members. I want to thank you guys for taking that step and trusting us with teaching you this skill set. I know not a lot of people would just go ahead and be like, hey, let me go ahead and give these guys X amount of money because they're going to teach me how to trade. So I want to give you guys a shout out for that. And I want to appreciate everybody that's a premium member that's on this call. But at the same time, I want to go ahead and elaborate that we have multiple educators in the chat, including myself, obviously Alberto, BB, Misael, which is a new oncoming educator, as well as Chris and Jamie. So I really want to encourage you guys to take advantage of these calls. When we set these calls up, we're not doing these calls for ourselves. We're doing these calls for you guys because we want you guys to excel, and we're giving you guys, it's almost like a buffet. Like Kelvin is a different type of trader than I am, than Berto is with his Battlestar Galactica fucking charts and shit, which I understand, but some people might not. Misael is a scalper. He'll send a trade and he'll be out in 3 minutes. So you guys, we're giving you guys options. We're giving you guys the ability to be like, hey, I like how that guy trades. I'm going to go ahead and follow that guy. So when that guy has a call, whether it be every Tuesday, I'm going to get on that guy's call because I like how he trades. We're not giving you just one strict, hey, do this. No, we're giving you the platform where you can choose and you can have the ability to be like, I want to go ahead and go with him because that's what fits, number one, my game plan, my trading plan. So it all ties back to your trading plan. So let me go ahead and pass this over to Berto. I know he's going to go over a few things with you guys, and then we're going to probably cap it off with analyzing gold. So appreciate everybody for hearing out.
All right. So I'm going to go over accepting risk, proper risk management, and how a proper risk to reward ratio can give you more longevity in the game we call Forex. So kind of like how David highlighting on the accepting risk, you always have to trade as if you lost that money. For example, Otis just sent out a trade. You know, he put out a 7-pip stop loss. You know, I've taken a few L's this week, but with a trade like that, I'm comfortable putting up a 0.1. I'm comfortable putting up $1 per pip. That's $7. I've accepted my accounts right now at like 160. I've accepted that I'm at 153. The next trade I take is as if I'm at $153 because I don't know if I'm going to win or lose that trade. But I have to kind of, if you've ever heard the saying when people say I'm going to assume for the worst, so I'm never disappointed kind of thing, that's kind of the mentality you have to go into trading. Not saying like you want to go with the mentality that you're going to lose every damn trade and you're a shitty trader, but just go with the mentality that, you know, if you lost it, it's okay because you planned for that. You planned to come back from that loss. You planned. That's why your account is, for example, $160 and not $7. Because if your account was $7 and you only plan to take one trade, kind of thing. So understand that, and it's better to accept your losses than it is to predict your gains. I'm gonna say that again. It's better to accept your losses than it is to predict your gains. It makes you more comfortable as a trader. It makes you understand yourself more as a trader, and it keeps your psychology as a trader a little bit more calm, a little bit more at ease, a little bit with less nerve when you're coming to the charts. You know, if you've accepted your loss, when that stop loss, if that stop loss hits you, you can't get mad. You can't get mad at yourself because it's like, well, this was my analysis and this was the point I told myself that I'm gonna get out if my analysis was incorrect. So guess what? My analysis was incorrect. Let's see if I can get in for the opposite, or if I can find a re-entry point if I still believe in it. Just let's reanalyze on a calmer perspective. I've already accepted the loss. Once again, yeah, don't revenge trade, but also don't marry the trade. For example, we were selling UJ. Kelvin bought UJ after my stop loss hit. I reanalyzed. I realized I broke a few trends, and I got into the trade myself. I'm up over 60 pips right now. I didn't marry the trade, but I also wasn't crying when it hit stop loss because guess what? I had a 13-pip stop loss for a reason. If it went past that point, I wasn't sure what it was going to do, and I wasn't trying to play with that sell. So I'm going to actually highlight something in where we at? Oh, no, it's not books. Here we are. This is Trading in the Zone by Mark Douglas. Let me share screen this real quick. And it's about really understanding risk. Other than the many issues surrounding responsibility we discussed in chapter 3, this is a book. I have the PDF if you guys want to read it. He basically talks about the fear of how little kids become scared of things like dogs. Like most of people that are scared of a dog may have gotten bit as a youth, but if we never instilled that fear in them, then they would never be afraid of dogs. It's the same with the markets. If you come to the markets and you're scared that your stop loss is going to get hit every time, you're coming trading to a fear, and you have to understand the risk. So I'm just going to read a little paragraph from here. There isn't anything about trading that is more central to your success and also more misunderstood than the concept of accepting your risk. As I mentioned in the first chapter, most traders erroneously assume that because they are engaged in the inherently risky activity of putting on and taking off trades, they are also accepting the risk. I will repeat that this assumption could not be further from the truth. Accepting the risk means accepting the consequences of your trade without emotional discomfort or fear. This means that you must learn how to think about trading and your relationship with the markets in such a way that the possibility of being wrong, losing out, missing out, or even leaving money on the table doesn't cause your mental defense mechanisms to kick in and take you out of this opportunity flow. It doesn't do you any good to take the risk of putting off a trade if you're afraid of the consequences, because your fears will act on your perception of information and your behavior in a way that will cause you to create the very experience you fear the most, the one you're actually trying to avoid. I am offering you a specific thinking strategy composed of a set of beliefs that will keep you focused in the moment and in with the flow. With this perspective, you will not be trying to get anything from the market or to avoid anything. Rather, you will let the market unfold and make yourself available to take advantage of whatever situations you define as opportunities. When you make yourself available to take advantage of an opportunity, you don't impose any limitations or expectations on the market's behavior. You were satisfied to let the market do whatever it's going to do. I think I had another excerpt from here I was going to highlight on page 90. Give me just a second, guys. And that's this one right here. Eliminating emotional risk. To eliminate the emotional risk of trading, you have to neutralize your expectations about what the market will or will not do in any given moment or in any given situation. You can do this by being willing to think from the market's perspective. Remember, the market is always communicating to you in probabilities. At the collective level, your edge may look perfect in every respect, but at the individual level, every trader who has a potential to act as a force on price movement can negate the positive outcome of that edge. To think in probabilities, you have to create a mental framework or mindset that is consistent with the underlying principles of a probabilistic environment. A probabilistic environment mindset pertains to trading consists of 5 fundamental truths. 1, anything can happen in the markets. 2, you do not need to know what's going to happen next in order to make money. 3, there is a random distribution between the wins and losses for any given set of variables that define an edge. 4, an edge is nothing more than an indication of higher probability of one thing happening over the other. 5, every moment in the market is unique. So that's just a few excerpts on Trading in the Zone. It's a great book by Mark Douglas. It actually is great for trading psychology. I highly suggest, I actually probably ask you guys to read this, especially for those of us in the premium chat. I've dropped this PDF several times. I'll drop it again for anyone willing to read it. It's a great read. I read either 20 pages or a chapter a day, and it took me like 2 weeks. And, you know, it's not that hard of a read. Number 2, we're going to talk about proper risk management. So using your stop losses, using something I call a position size calculator David mentioned earlier. I'm going to bring that up. And then we suggest that you determine the kind of risk you want to take per trade. We suggest anywhere between 3 to 5% per trade. Can y'all see the position size calculator? Somebody drop something in the chat if you
Yeah, you can see it.
Okay. All right. So this is a position size calculator. This is one of the many tools. This is the first one I started with my FX book. We're now trading with EliteFx, which also has a variety of tools. This is still my favorite. It's a little bit simpler, although it only offers Forex pairs. So you can't do gold, you can't do US 30, that kind of thing. But also once you start inputting this enough into yourself, you'll be able to read this yourself. You'll be able to see a trade like US 30 or SPX 500 and understand the risk to reward ratio in almost a snap of a second. My wife actually just started trading. She's taken a course on baby pips and a small course on EliteFx, and obviously working with me on a day-to-day basis. And this is the first thing that she's learning right now is how to calculate pips and how to calculate her risk. It is something that I honestly think you should learn before you even learn how to run MT4. But basically what you do is you come up here. So let's use Otis's EN example. We're going to do a $100 account. We suggest 3 to 5%, depending on how risk averse you are. Let's say you're less risk averse, you're going to do 3%. Otis gave us a 7.4 pip stop loss. You can even put it down to that, 7.4 pips. Choose your pair, which is EURNZD. Where are we at? I'm blind as hell. Okay. Calculate. And now it tells you how much you're risking. 3% of $100 is $3. So accepting the risk, once you put this trade in, the next trade you take when you input your account size is $97, because we've talked about accepting that risk. You've accepted the loss. If it happens, you are not upset because you're not trading with $100 in your account. You're trading with $97 in your account. So off those $100, you can drop a 0.06 on this, and you're still properly risk managing. Obviously, if you do 5%, 4%, the lot size is a little bit higher, but also understand you're losing a little bit more. Also, you do not want to be trading more than 10% of your equity at a time. Your equity is basically what you have in your account. So I'll pull up my account. Can y'all still see my camera or just the screen?
No, we can see both.
All right. So at the top of the account, you can see where it says balance. I have a floating profit of $14. So my equity is $154 and my margin is $6. The equity right here, I have 154. That's what we mean by you do not want to trade more than 10% of your equity. So if my equity is at $154, that means no matter how many trades I take, you see I have a buy limit on EN. I got a GJ buy limit. I got 2 GJ buy limits actually, and a gold sell limit. No matter how many of those activate, at any time, once I get to $16 margin, I must cancel out all of my trades. Because what happens if all those trades hit stop loss? That's 10% of my account in one day. I don't want to go past that, I take another 10% of my account. I've lost a fifth of my account in one day. I do this for 5 days consecutively. I blew my account in less than one trading week. And that's basically what happened when I blew my account. I was just making shitty trades. I was doing the wrong things. So 3 to 5% risk per trade. Identify your stop losses before you get into a trade. The only time you don't want to have a stop loss is I run tester trades. So like I'll put in one like a 0.01 at a point, and then I'll just determine whether it's $5 or $10. Even though it's not a stop loss, I determine an equity loss, a $5 or $10 equity loss before I get out that trade. And if it doesn't go my way, if it goes my way, I have another reentry point a little bit below where I did the tester at, and then I'll properly risk manage that. And then my stop loss will be my entry. Now I can go to my position size calculator. Just so you guys can see the EliteFx one, you can determine your Fibonacci points, the high price and the low price. Here, you don't even have to know how to draw a Fibonacci. Literally just look at your high and your low and input them in here. Pivot points, high, low price, to close, current open price. And this is a different level of trading I don't use, but if you want to trading. Another position size calculator, how to determine pips on Forex pairs. Your risk to reward ratio. If you're more percentage based risk, you can do it on risk percentage, and then multi-target. So if you're looking for entry price, lots closed, basically like if we set 3 TPs and you want to take all 3 TPs, you can come to EliteFx, do a multi-target, and then input your lot size, your entry price, your target price, all that. And it tells you how like you should input your total. So you go to position size calculator tells you to drop a 0.01. Then you put what the target 1 price is, what the target 2 price is, what the target 3 price, and it'll tell you how much of that 0.1 should you close into account. Also, take into account 3 to 5% per trade, and I specify per trade because if we send a trade with 3 TPs and you put a 5% risk and you get a 0.1, that doesn't mean drop 3.1s because now you're risking 15% of your account. That means that 0.1 should be split into 3 entries. So 0.04 and 2.03s if that's the way you want to do it. Lastly, we're going to finish off with risk to reward ratio. I always stress you guys have a 2 to 1 risk to reward ratio minimum at the very least. Anything you do in life, you don't want to put in 2 times the effort to get half the amount. What kind of sense does that make? You want to put in, at least, or I said that wrong. You don't want to get half of what you're gaining for 2 times the effort. That doesn't make sense. 2 to 1 is optimal, but if you do something, you always want to get at least what you got out of it. But when it comes to investments, when it comes to putting your money into these markets, when it comes to investing in yourself in the stock market and whatever it is, you always want to obviously gain more than you risk. So if you look at all my trades, at least the trades I took, this is NZD USD. I've got a 35 pip stop loss with 130 some pip TP. My risk to reward ratio is 4.3. So that means if I lose this trade, if I win this trade, I will have gained 4.5 times what I risked if I lost it. UJ. Well, this is already my stop loss is in profit. So, but just for examples, UJ, I had, I believe it was 17 pip, 23 pip risk for a final 118 pip TP. That's a 5 to 1 risk to reward ratio. So if this trade hits take profit, I will have gained 5 times the amount of what I risked to get into this market. Now I'm not losing anything anymore because if you see where the red line is at, my stop loss is deep into profits, and this is where I'm looking to move it next, depending on dynamic support and resistance. I'm actually using the 9 and the 21 EMAs a lot more than I began with. I'm starting to understand them a lot more. I will go over this probably tomorrow at the next. I don't really know. We're actually probably going to watch the Democratic debate, get you guys into fundamental analysis, get you guys learning the news, learning what it is the markets do, what it is the people around it do, and probably work on your dream board. So maybe next week's Nest or whatever call I host next week, maybe that'll be something I touch on. And then, as I've said before, you can lose 7 out of 10 of your trades on a 3 to 1 risk reward ratio and still be profitable. I know we strive for 50%. 50% is not unattainable. A lot of us are newer traders. A lot of us basically got introduced to trading maybe through us or through somebody before us, and your platform that got you there wasn't as great as the platform you're at now. So just always understand, 50% is what we strive for. 50% is great. 50% is the consistency we want to become long-term traders. But at the beginning of your process, it is okay to strive for 30%. It is okay, and you'll still be net profitable if you properly risk to reward your equity. I'm not saying go for 30%. I'm not saying be satisfied for 30% or hit 30% of your trades and stop for the rest of the week. I'm saying once you're at 30%, feel comfortable with yourself. Understand that this is a long-term process, that a lot of us haven't been doing this for a year. I myself haven't even been trading for a year. So I still go for three out of 10. If I hit more than 3 out of 10, that's great. Before I blew my account, I was at a 70% risk reward ratio. I was airheaded. I was feeling myself. So maybe that's part of what helped me blow my account. My psychology was off a little bit, but at the end of the day, 30% is all you need to become profitable in these markets. Obviously, we want to be more than profitable. We want to be successful. We want to build businesses, and we want to use this as the boat to more than this. My wife has a business of opening up a restaurant. I want to take the money that I make inside of Forex and do that for her. My mom still hasn't paid off her mortgage. I want to do that for her. I still want to pay off my car. I want to do that for myself. I want to be a business mogul. I want to start investing in things. So Forex is a great technique, but also we have to understand this isn't what we want out of life, if that makes sense. A lot of us are doing this because it simplifies our goals, but as easy as trading is and as profitable as it can become, it's not necessarily what I want to wake up and do every day. It's just a vehicle to my success that helps me do what I do want to do every day. And it makes it a lot easier than going to work 9 to 5. So we got about 3 minutes, and then I'm going to end with another excerpt, this one being from the Candlestick Trading Bible. Let me do a new share. Unfortunately, we won't get to analyze anything today, but that's okay. You guys got more than enough on the call, trading psychology wise. So let's go over the importance of a stop loss and a risk reward ratio. I know I read fast, so I can probably get this done in 3.5 minutes. All good methodologies use stops. A protective stop loss is in order to exit a long or short position when prices move against you to a specified price. The stop loss ensures against a usually large loss and has to be used in one way or another. An initial stop loss can be placed with your order on the trading platform. The trade will be closed automatically when and if the stop loss hits. This type of stop loss will allow you to execute your trade and go spend time with your family or friends. This will help you to trade out of your emotion because you know how much money you will lose if the market didn't go in your direction. Just like Dave said, stop loss, stop looking. Go enjoy yourself. Lots of traders use mental stops. When they enter a trade, they don't place a stop loss because they think that the broker will hit their stop loss, which is not true. The reason behind using a mental stop loss is human psychology. Humans hate to lose money. And if you don't accept losing money as a part of the game, you will never make money in the markets. Scared money does not make no money. Don't ever think of using mental stops because you can't control the market. You can't be sure that the market will do this or that. Also, if you put a mental stop and then you leave your computer and it passed your mental stop, what are you going to do? Before you enter a trade, calculate how much you may win and how much you may lose. Place your stop loss order and your profit target and forget about your trade. Set it and forget it. Set it and forget it. Set your trade and enjoy your day. I like to reanalyze every 4 hours just to see if I can move partials, close partials, move stop loss and profit, that kind of thing. But other than that, I'm not telling you to look at your chart every 15 minutes. Don't ever risk money you can't afford to lose. I got a lot of questions from traders asking me about how much money they need to start trading. First of all, you have to take trading as a business. You can make money in the business, but you can lose it as well. The amount of money that you need to start trading depends on the amount of money that you can afford to lose. Don't ever borrow money or risk big amounts on money you cannot afford to lose, because trading is all about emotions. If you trade and you are afraid to lose your trading account, you will fail in this business because you will be controlled by your emotion, and this will affect your trading decisions. You will not be allowed to follow your trading strategy, and you will certainly fail. The best thing to do is start small and try to get as much experience as you can and build slowly your trading account. This is how successful traders slowly become successful. And then risk to reward ratio. Risk to reward ratio is a concept that will make you a winner in the long run. Before you enter any trade, you may have to know how much money you will win in the market if it goes in your favor, how much money you will lose if the market goes against you. Don't ever enter a trade in which the profit is less than the amount of what you risked. If you will risk $100, for example, your profit target should be at least $200. It's a reward ratio of 1 to 2. Let's suppose that you took 10 trades with 1 to 2 risk to reward ratios, and every trade you risk 100. You win 5 trades and you lose 5 trades, so you lose $500, but you win 1,000. The benefit is $500. This is the power of a proper risk to reward ratio. You shouldn't think that you have to win all your trades to become a successful trader. If you can take the advantage of a risk reward ratio, you will always be profitable. And I'm going to leave with that. This just talks about money management strategies, how to analyze the market, when to sell, when to exit, basically stop losses and setting up your positions. I have 8 seconds. I appreciate all of you guys. Thank you for hopping on. I love seeing the premium members on here, and I can't wait to see about 1,000 of you motherfuckers.
Let's go, let's go, let's go, let's go!
Appreciate that, bro. That was some heat.